Every single day, the Alipay network coordinates the financial activity of over 1.3 billion users and 80 million merchants. Before this digital scale existed, the Chinese economy ran almost entirely on paper. Physical cash meant counting, carrying, and verifying every single transaction by hand. When online shopping first emerged in the early 2000s, it hit a wall. Buyers and sellers were totally anonymous. Without a face-to-face exchange, buyers refused to pay for fear the goods would never arrive, and sellers refused to ship out of fear the buyer would never pay. To get the digital economy off the ground, Alibaba couldn't just build a marketplace. They had to build a software mechanism that manufactured trust where absolutely none existed. In 2004, e-commerce was locked in a standoff. Buyers held their money, sellers held their inventory, and neither side would blink first. The solution was a neutral escrow vault. A buyer's funds went into a locked central hub, released only after they confirmed delivery. Holding funds in the middle eliminated scam risks for both parties. Millions of people who had never owned a credit card suddenly realized they could rely on a digital middleman. This conditioned an entire population to trade with strangers, creating the exact behavior needed for a cashless society. By 2011, digital payments began escaping the desktop computer and entering physical retail spaces. Traditional point-of-sale card readers were expensive, locking out millions of micro-merchants. QR codes solved this by requiring zero hardware. A street vendor only needed a piece of paper with a printed code to accept digital money. This comparison shows the two technical modes that make the system work. On the left is the merchant-presented mode. The store displays a static sticker. The customer scans it and types in the payment amount. On the right is the customer-presented mode used by larger retailers. The customer opens their app, displays a barcode, and the merchant scans it to instantly deduct the exact total. Notice how the customer-presented barcode on the right isn't static. It scrambles and regenerates every 60 seconds. This dynamic generation prevents fraudsters from taking a photo of a user's screen and using the code for unauthorized purchases. Stripping away the need for bulky card readers allowed Alipay to capture every microscopic offline transaction, from megamalls to street-side fruit carts. After 2013, the platform grew beyond payments. Users could now order food delivery, rent bikes, and pay utility bills within the same interface. The core technical hurdle of a super app is bloat. Clogging a single application with 10,000 distinct services usually causes the file size to explode and the user's phone to crash. This schematic reveals the workaround, the MPAA architecture. MPAAS is an acronym for Mobile Platform as a Service. Instead of building one massive app, Alipay acts as a heavy host container that runs hundreds of lightweight, isolated sub-applications called mini-programs. These mini-programs use a dual-thread design. They separate the visual rendering, drawing the buttons and text, from the business logic, processing the data. Running these tasks on parallel tracks gives the user a fast native app experience without requiring them to download anything from an app store. This structure ensures users can live their entire digital life without ever leaving the Alipay app. In 2013, Alipay launched Yuebao. This feature allowed users to sweep whatever spare digital change was sitting in their wallets directly into an online money market fund. Because it offered higher interest rates than traditional banks, and the money remained instantly available for daily purchases, millions opted in. By aggregating micro-deposits from over 1 billion users, Alipay quietly amassed one of the largest money market funds in the world. This aggregation of capital prompted a regulatory response. The central bank mandated that all third-party payment platforms route their transactions through a centralized clearinghouse, known as NUCC, or the Nets Union Clearing Corporation. This provides the state with oversight of all digital financial flows. While forcing Alipay to surrender its data monopoly, integrating with these state regulations gave the company a permanent official role in the country's financial plumbing. Today, the network expands through Alipay Plus, a unified back-end gateway connecting independent e-wallets globally. Foreign tourists pay in China with their home apps, while Chinese tourists use their wallets abroad. The central Alipay Plus node handles all currency conversion and routing behind the scenes. The system began as a simple e-commerce fix. 20 years later, it manages a $200 billion global network. It shows how solving a basic trust gap with software can dictate the economic flow of an entire country.